What's up, fam? Welcome back to the Wall Street Ben Black Playbook YouTube channel. If you are brand new to me or to the stock market, you have landed in the right place. I absolutely love the stock market, and I love teaching and helping people to be able to set their own table. So y'all already know I'm back this week to give my swing trade watch list of the week, but I wanted to do things a little bit different. I've noticed that lately, the past few months, we've had the new generation of investors and traders coming into the market. So I don't want to just hop right into a watch list. Let's have a small little introduction into how to read price action. So, green means go, red is dead. Y'all know that. We have enough common sense to be able to look at these colors and to rationalize that the green candle means that the price is going up and the red candle means that the price is going down. Now, the green candle is known as a bullish candle, while the red candle is known as bearish. Where the term came from, just to help you remember, is when a bull is attacking, it bends its heads down and lifts its prey up with its horns. That's how they attack. A bear attacks by starting off on their hind legs, and then they have to come down and attack their prey. They come down. So a bullish market means price is going up. A bearish market means price is going down. Keep it real simple. When we are going back and analyzing a chart, back testing is what it's known as, there's a certain way that you want to pull up the candle and read it, all right? Now, if you've ever pulled up a chart and you're like, okay, this is a foreign language, baby, guess what it is? It's Japanese. It's Japanese. Some of these names are going to have nicknames with me as we continue through this series. But for now, we're just going to analyze a basic bullish and bearish candlestick. I'm going somewhere with it. Hang on. Now, when we're looking at a bullish candle, remember a bull bends its heads down and then lifts its prey up with its horn. Bullish means up, right? So when I go back and I'm back testing it, how I want to read it to myself is that this candle opened and sellers attempted to come in and push this price all the way down low, all right? When sellers step in, the price goes down. They attempted to push this price to the lowest point, but buyers who make the price go up came in and said, I'm in control. And they pushed this price all the way to the highest point just to close it a little bit below the high. Now, when we go and we read a bearish candlestick, it's going to be read the opposite way. This candle opened up top and buyers attempted to step in and push this price up higher, but the sellers came in and said, nope, we're in control right now. This is us. They pushed it all the way to this low and closed it a little bit above the low. So a bullish candle is going to open low and close high, while a bearish candle opens high and closes low. Now, this part, the rectangle, is known as the body of the candle, all right? It's going to show us what the open and closing price was. The sticks at the top are wicks. You might hear some people refer to them as shadows. Same thing, okay? But just so that you're aware, and no matter what room that you're standing in, it's either a wick or a shadow, depending on who you're speaking to. So the wick is simply just showing me what the highest point was and the lowest point, all right? The high and the low will always be at the bottom and the top of the candle. Now, let's put some numbers to this. We'll say that this bullish candle opened at $5. It got as low as $3. It got as high as $10, but it closed at $7. All right. The wider the body, aka the longer the body, the more that we know that the buyers are in control in this bullish candle. If it was a itty bitty body, that's letting us know that maybe the buyers are starting to lose control and we're about to see the market shift the other way and price will drop instead. Remember that before you even move forward. Go back, rewatch it. Take your notes, make sure you got it, because I'm going somewhere with this. Now, y'all already know that before I even go into the rest of my watch list, that I need to check out the major indices. So that's going to be the NASDAQ 100, the S&P 500, the Dow, the Russell 2000, all of that. Love it. But of course, right now, we're going to check out NQ and ES, which are the tickers for the NASDAQ 100 futures and the S&P 500 futures. So, child, we had us a time last week. A time was had last week. It was, are we going up? Are we making a new high? Are we pulling back? Are we holding the trend line? What are we doing? One thing that I want to make sure that you all understand is that when we did push back up Wednesday and Thursday, Look at that volume. The volume was lower, my darlings. The volume was lower. Now, right now I'm on my daily, and we'll switch over here to the weekly. And this candle that's coming in right now, I'm recording this on Monday, President's Day, while the market is closed, but the futures actually opened up for part of the day this morning. They closed and they'll open back up here in a couple of hours. So we're going to ignore that candle for right now, and we're just going to look at the last 2 weeks candles. My darlings, that's a bearish engulfing right there. Not only that, we also have what's known as a pocket pivot. So right here, the bearish volume that we see that came in on last week, the bearish volume from last week is higher than the past 5 bullish volume bars. A pullback is impending. A pullback is impending, but y'all don't be afraid. The market goes up, it goes down, but at this current moment, when the market drops, you get excited because it's a time for you to buy. We have to shift our mindset from 2022 and 2023. My darlings, we are not in a bear market. Every time the market drops, that is a dip to make a higher low, and you need to have a mindset to buy. Buy, 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 buy. Just buy. Yeah, I know y'all see these red candles in here. We've had 3 bearish weeks since October 2023. That's it. That's all. You can withstand the test of time. You can do it, my darlings. You can do it. Now we have this nice, beautiful trend line here. And when I pull up my moving averages, we are hovering right above the 20 MA. I am going to be watching NQ this week and don't really plan to make any move unless we break the high, get a beautiful bounce off of the trend line, or we break below the trend line and the 20 MA and work our way down to the 50 MA, where we should find support because we know that the 20 and the 50 MA on higher time frames are known as our value zone. Okay. Once we find support in between the 20 and the 50 MA, we just look at the initial trend, which is an uptrend, and then that helps us to be able to determine ahead of time that, okay, this is where we want to buy, and we want to buy to go up because the initial trend was an uptrend. It is too easy with that one. All right, now when we look at ES, the S&P 500 actually had, or the NASDAQ had a little bit, they tried to hang on a little bit more. Tech tried to hang on. The S&P 500 said, we're coming down. We got us another bearish engulfing here on the weekly. Now, this bearish volume last week is not higher than the past 5 weeks of bullish volume, but we still see what we see. We still see what we see. Now, here on the daily, oh my God, what a beautiful, beautiful double top. And you can honestly even just see it even more so clearly on the 1 hour. I'm obsessed. I'm obsessed. We also had the most gorgeous hold on this trend line. I believe this was Tuesday. Getting the move back up. But again, look at that volume. It was a bull trap. We're not quite ready to go up. So with that, looking at NQ and ES on a, I like to call it top-down analysis of the market, looking at the futures and then going to look at the ETFs and then going to look at the individual companies. So we're going to mosey on over here to SPY since we just looked at ES, and y'all can definitely see this double top here on the daily as well as here on the 4 hour. Y'all, it's okay to have a correction. RSI also gave us this bearish crossover on Friday, letting us know that it was oversold and coming back down. When we're on the daily, we already know we've been oversold up here. Y'all already know we've been oversold, okay? Now that trend line that we saw on ES and that beautiful hold is the same thing that we're gonna have here on SPY. They're the same thing, just different baskets. We'll word it like that. So when I pull up my moving averages this Tuesday, you can just barely see right there, right? Look at that. That trend line is perfect with my 20 MA. And we did get that hang to it. Again, I do see this double top. The volume spike on the bearish side was just amazing as it was pulling back up, lower bullish volume. I do believe that we're going to get a move back down towards the trend line, and whether or not we hold the trend line or we break, it's just a wait and see. We don't have too much going on the economic data side. Wednesday we do have FOMC minutes at 2 p.m. and on Thursday jobless claims. We'll see what happens. When we look at QQQ, it's my same analysis as what I see on NQ, because again, they're the same, my babies. They're the same. Now on NQ, baby, on Friday it gave back Thursday's gains, Wednesday's gains, and dang near gave back all of Tuesday's gains, half of Tuesday's gains, right? So I'm absolutely looking to day trade puts on QQQ, because I did go ahead and enter into some leap positions on the Qs that expire in 2025, late 25. So anytime that QQQ and SPY have a pullback on the higher time frame, I'm going to swing trade or day trade puts just as a way to hedge my leap, right? So I will be looking, we'll go ahead and say below the low of Tuesday. So below about 425, I would look to enter into a day trade. And if it did look towards the end of the day as if it was going to indeed close below this level, then I probably would swing it out a little bit further. I have to just go ahead. The Qs, NQ, all of that just looks just chef kiss delicious to me. And we know that the NASDAQ 100 is the index that's housing, it's mostly tech weighted. Not even mostly, it is tech weighted, right? So seeing how delicious it looks up here, of course that made me say, well, let me check out the sector ETF for technology, which is going to be XOK. I know, it looks similar. Look what we're learning here, my darling. Swing on theme. It ain't hard. It ain't hard. So we have this beautiful trend line here, and we're going to go ahead and turn off the averages. We don't need to focus on that right now. Okay, so we see this here. When I first saw this, I was like, this is kind of looking as if a head and shoulders is playing out. Looks like we have a bit of a head and shoulders playing out, with the neckline being here about 197. We'll go ahead and mark that off. So this moved down to the trend line to about 198. If we come below the low of Tuesday, is this Tuesday? Below the low of Tuesday, so about 201, I'm definitely going to be interested in doing a short-term swing down to about 197 to the trend line, and if it does break there. Now, if we turn on our moving averages, looky there with this 20 MA right there, my darlings. XOK did go ahead and close below the 20 MA on Friday. I'm loving it. I'm loving it. I'm loving it. We have a tweezer top on the weekly, which is a bearish candlestick pattern. We'll get to that next. Don't worry. I'm absolutely loving it. It's overextended, but we'll see what happens. It is a wait and see, because y'all already know what comes Wednesday after hours. Y'all know Big NVDA is about to shake the market up. We either gonna see the 800s or we'll see the 650s. Either way it goes, a little shake up is coming this week, and I can't wait. I'm so excited. Now, my babies, remember what we talked about whenever we were looking at the candlesticks at the beginning of the video, when we were going through learning how to read the candlesticks? And I said, the larger the body, the more that I can believe that the bulls or the bears are in control, depending on the color of the candle. The smaller that body is, the more that I'm going to believe that they're starting to lose control. Whether it's the bears or the buyers. I say the bears or the buyers, which is correct, but let me make sure I don't confuse y'all. Whether it's the bulls or the bears, meaning the buyers or the sellers, we just don't know. Y'all, look what we had on the weekly on AMD. It has sat here consolidating for so long. For 3 weeks. Is that 4? For 4 weeks. Okay. Doing what it has to do, pretty much making the same highs of 179, about 179.50 and 162.50. Beautiful range in there if you catch it from the bottom to the top, bottom to the middle to the top, however you decide to play it out. Beautiful little range in there, y'all. I want to break. I want to break, because look at this volume. Okay, because look at that. All right, now. Now, when we come to the daily, again, in this range in here, it is, let me go to the 1 hour because you could really see it in the 1 hour. It is moving back and forth between the support and the resistance. I want it to break before I make any move. And again, with all eyes being, I promise I know how to use this. With all eyes being on tech this week, so am I. All right, I'm just not about to worry about NVDA. Look at this. We're getting these beautiful moves, right? So, come on down there. Come on back down here to this 162. And if the market does, you know, if tech do what it's trying to do and lean back, pull on back, I'll be excited. So, I do want to go ahead and put a level here in between this range, like a midway point, I'll call it. And my point of reference is this gap up in that wick right there. And I'm just going to place my level and I'll make adjustments as I need to inside. Just because you placed it don't mean you can't change it, babies. Dude. So now I have this here. Let's see if I want to move it to the bottom of the body instead, since we are traveling down. I like this placement. Catching those highs, bottom of the body, boop, boop, boop. So about below 171.50, because I just like to give it a psychological whole number. So below 171.50, I'll look to enter for a day trade, which I will hang on to if it continues to break below the if it just continues to break below like about 168 and then on down to 163. And hopefully going to lose that 163. All right, to give us a nice, beautiful little pullback, because it did make all-time high. It's been, every time we come up here, it's been all-time high since above here, right? And it's holding previous all-time high as support from back here in November 2021. It's holding it as support right now. What you gonna do? I'm gonna need you to break above 181, 180. Or just come on down up below here. All right. Now, when I have my averages, the 20 MA, the averages are going to move up to meet the price. All right. So even like as this is pulling back, the 20 MA and the 50, it'll still pull up to meet the price, but just break. And this is pretty much the same setup that we're gonna see across the board, y'all. Everything that we just looked at on NQ, QQQ, AMD, as we're looking at, or XOK, and as we're looking at Amazon and Apple, I have the same analysis for the most part. I want tech to lean back, pull on back. Why? Because I'm trying to buy. I'm trying to buy these swings, and I will be back with a video telling y'all. No, I can't tell you because that's financial advice. Showing y'all what I'm gonna do. Amen? Amen. So here on Amazon, on the weekly, beautiful bearish engulfing, overextended on RSI, oversold on RSI. We have sat here in this just absolutely hideous range. Okay, pretty much making these same lows. We're gonna go ahead and move these up. We're out of there. Of this 167. And with the highs of pretty much about like 172, we did have 2 days where it went above there, but this is about, we can say about 172, right? Tight range for Amazon. Our only, about one of the only one in the Magnificent Seven, I believe it's the only one in the Magnificent Seven that has not created new all-time highs. Hurry up. Amen. Now, when I look at this, I also subjectively somewhat feel like forcibly I see another head and shoulder. That's me. Okay? But I would never play it unless Amazon broke below 167. And if we did break above 171.56, I would absolutely be interested in going ahead and playing to the upside. The reason why is because we've already tested that before. It already went above it, broke above it, pulled back, failed that retest. But if we broke back above it, I would be interested in going ahead and entering into a swing to the upside, especially if the market was in confluence with that move, meaning that the market had done its pullback and was working its way back up as well. Now, I would absolutely be ready to scale out or even prepared to sell if we got to the 175 and there was any sort of price action signal that was telling me that we're about to double top here, right? You always have to look ahead of you. If we break out here, this is previous high. It could reject there and come down, and then that's a double top move, right? So I will be prepared in this $4 range. If the market is not in confluence with the move and Amazon breaks to the upside, I will not be interested in taking this until I saw a daily close above this 175 level. Now, Apple. Apple said, since y'all said we're not the largest company in the world anymore, we're going to do what we want to do. We're going to do whatever we want to do. Apple, I'm going to need you to hurry up and do what I need you to do. That's what I need. Now, look, I'm seeing what I'm seeing. Seeing what I'm seeing. Right? Because not I could extend this all the way down here to January 2023. I'm seeing what I'm seeing. Okay, but it's a wait and see. I love when prices at your trend line because I really don't have to think too hard. You either gonna bounce on that trend line and move back up, or you gonna break below. Thanks, market, for making it easy. Okay, now here on the weekly, prices finding support in between my 20 and my 50 MA, with the initial trend being an uptrend. On the daily, we came down to the 200 MA. Close below it. I'm gonna wait and see. Okay. Now, me personally, I might day trade it. The break below the trend line, that'll be a beautiful day trade to catch. Whether I catch it right when it breaks, I will be prepared for it to be a shorter day trade because I know that it will pull back up to the trend line to retest it. Right. So here on the 15-minute. We say like all bearish signals up here, right, on the 15-minute. But if it does break below this trend line, I'm understanding that it will pull back up to retest said trend line, right? So if I decide to trade the break, I have to understand that that's a scalp. And to me, a scalp is any position that I hold for less than 20 minutes. That's a scalp to me. I know, not by definition, but to me. It's a shorter term day trade. Now, if I decide to see, if I see a morning star or anything right here that's price action signal telling me that it's ready to pull back up, if I decide to trade this is also needs to be looked at as a shorter trade. All right, shorter trade this time. I understand that that's also a shorter trade, y'all. Because I don't know, are you going to get back up here and reject and then come back down? Or will you get up here and come back above the trend line and go back up? So I am the type where that is, again, why I said, if I do catch the break on a lower time frame on an intraday level, I will be interested in taking it as a day trade. Not so much getting it in here unless the market was, again, in confluence with a move back up. But if this move here, when it returns to the trend line, will determine which way I swing it. If it breaks back inside of the trend line, I'm getting in calls. If it rejects this trend line, we'll go ahead and get in puts. And that is my swing trade watch list of the week, you guys. Make sure that y'all hit like, subscribe, turn the bell on, leave a comment letting me know what it is that you want to look at for next week. Pause. I have one more I want to show y'all. SMH. Because I know some of y'all are going to want to play NVDA. Don't do it. Y'all see what I see. Y'all see that. 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 I want this right here. where we have previous resistance that turned into support this day, the 20 MA right under there. The 20 MA is at 194.57. So I'm going to go ahead and say that. Because why? I wouldn't want to get in below 196.87 just for it to come down another like $1.50, $2 and hold the 20 MA. No, you're not going to frustrate me like that. So I'm going to go ahead and put it at the 194.57. A move below there or a hold on the 20 MA is the way that I'll play it. Love y'all. See you at the top. Bye.